What's up everybody? Welcome to the Stocks channel. My name is Cory, and today in the stock market we did see a mixed bag in the indices, and we're at a crossroads of indecision before we see which direction the stock market is going from here. First up, let's take a look at the S&P 500 SPY ETF. So let's crack open this chart and see what's going on in the stock market today. Alright, so first things first is yes, I'm not feeling very well, so we are going to move quick today. So on SPY, you can see we were down 0.32% and we did close below all the moving averages, and we still do have this downtrend that we're in, so you still need to be very cautious until we get the bullish breakout. Your first bullish breakout will be closed back above 450 and then back above about 456 to 457. Until we get that breakout above 457, you need to respect this downtrend because, as I always tell you, the trend is your friend and this is a downtrend until it's not. So there is a possibility this will be a bear trap, and you can see we did go down on low volume today, so we're not seeing high volume selling. So just because we're going down, you need to pay attention to a lot of the internals and make sure that it's actually bearish selling volume and not just a giant bear trap before we get that bullish breakout. So if you want to play it safe, wait for the confirmation of the breakout. Otherwise, set your risk at all these strong support levels, and then you can stop out for a small loss if we do continue to go lower. Your support levels are 445 and your support trend line at 441. And if we break down below the 440 level, you're coming all the way back down to about 428. And below 428, we're going to see a full-blown bear market, and we're more than likely going to see a prolonged period of weakness and the market continue to trend lower. On the Nasdaq 100 triple Qs, we were down 0.8%, and again, you can see it's on relatively low volume, so we're not seeing high volume selling, so be cautious of the potential that this is a bear trap. Your critical support level to pay attention to is 352, because if that level breaks down, we could be coming back down to 340, and below 340, we're more than likely going to see the triple Qs entering a bear market with the break below 334. However, remember that gaps do get filled. It's not a matter of if, it's just a matter of when, and we do have a gap at 364, so I would respect that gap. And once we fill that gap at this point, if we do close at that level, it will be the first signs of a bullish breakout. So above 364, we're looking more bullish, and the next bullish breakout will be 370, and then back over this 50 EMA, which is going to be right around 373. So you can see the triple Qs are a lot weaker than SPY, and you could see this sell-off was a lot more in the magnitude, and we're starting to get lower volume selling, so we could see the sellers getting exhausted, which means there is the potential when we fill this gap, we could get that bullish breakout, so watch that level closely. In the Dow Jones, we were flat on the day, closing right near the 5 and the 13 EMA and just below the negatively sloping 20. So this is clearly still a downtrend, but you can see the Dow Jones is starting to look a lot stronger lately, so the bullish breakout level to pay attention to is back above 354. Back above 354, you have resistance at 356, and the breakout level above 360 will close that gap above. And remember that gaps do get filled, so pay attention to that gap on the Dow. To the downside, watch support at 347, because if we break below that, we're coming back down to 344 and then 340. And below 340, we're more than likely going to see a retest of the lows at 338 or possibly even 331.4. And yes, that is going to be the bear market scenario, and there's a ton of support before we see that. In the Russell 2000, we were up about 0.5%, closing just above the 5 EMA and getting rejected at a resistance trend line. Your bullish breakout levels will be back above 204 and then back above 212, and above 212 we'll need to break out above about 216. From there, we can run all the way back up to 226 and possibly even close the gap right around 228. To the downside, you need to watch strong support at 196 and 195, because if we break that, we could be coming all the way down to about 170 with support on the way there at 191 and 183. On the ARKK ETF, we were down 0.37%, and we did have a very bullish day intraday, but got rejected and saw selling into the close. And at one point, it looked like the ARKK ETF was going to try to break out back above 75. So this is why you need to respect the closing prices and respect the downtrend. So expect to see more downside in ARKK on a breakdown below 69 with support at 64 and 60. Now the bullish breakouts will be back above 75 and then all the way back up here, back above about 84 and 91. But wait to get bullish until you see the bullish breakouts, because this is a strong downtrend and this is a very strong bear market. The VIX was down today 1.5%, so we're actually seeing the VIX going down with SPY, which tells us that fear is leaving the market. And this does go into that scenario that this could all just be a bear trap. You're seeing the VIX going down on low volume selling, and it's not something that I would just ignore. Low volume selling and a decreasing VIX are perfect signals that this could be a bear trap, so watch that closely. If the VIX does spike out back above 24, then we're more than likely going to see a deeper pullback. And the next time the VIX closes below 20, you're looking for a bullish confirmation that we are going to break out and possibly see the bull trend return. On Bitcoin, we're currently up almost 4%, and Bitcoin did get a bullish breakout back above 41,000 and back above the 50 EMA. So the next bullish breakout will be back above 46,000 and then back above 51,000. So this is a good indication of risk on sentiment potentially coming back into the market. which is another indication that the pullback in the indices could be a bear trap. So don't ignore Bitcoin as an indication that it could be leading the stock market higher, but also remember that Bitcoin is coming out of a bear market, so this could all just be a bear market relief rally and not anything to put too much weight on. Now to the downside, you want to see Bitcoin staying above 43,000 and 41,000. And if we break down below 41,000, this was all just more than likely going to be a bull trap, and we're coming all the way back down to 30,000. On NVIDIA stock, we were up 1.68% today, closing back above the 5 and the 13 and just below the 20. And your bullish breakout will be back above 253. Back above 253, our next bullish breakout will be back above 271. And then we could see NVIDIA going back into another bull cycle leading into earnings. Pay attention to earnings because you're more than likely going to see volatility around that event, and that's not something you want to ignore. To the downside, you have support at 240, 236, and the full gap closes right around 228. And once we fill that gap, it could be a support level to bounce higher. Otherwise, look for downside support at 219 and 209. On Tesla, we were down 1.73%, closing back below all the moving averages and holding on to that bear trend. So you need to be very cautious because Tesla is going to see a lot more selling pressure if it gets another daily close below 900, and you're more than likely going to see it come down and fill the gap at 859. So Tesla below 900, look for it to come back down to 859, and possibly even 843, or retest the low around 829. If at any point Tesla starts closing below 815, you're looking for a full-blown bear market and prolonged weakness, so watch that critical support level. The bullish breakouts are back above 940, and then back above the 50 EMA at 985, and then closing back above 1000. Wait to get bullish until you can see that price action confirmation because this is a bear trend, and you should not be expecting to see Tesla going higher while it's trending lower. Apple stock was down 0.42% today, and we still see Apple stock holding on to that bull trend and price action still above our 20 simple moving average and our 50 EMA. So Apple is really helping hold the market higher, and if we see Apple breaking out above 176, we should see a retest of the previous all-time high at 182, and a breakout above that, we're looking for a brand new all-time high with a price target of 188. You have strong support down here at 169 all the way down to 167. But if we lose that support zone, we're coming all the way back down to 162 or 157. So watch that very critical support zone around 167 to 169. And as long as we're above it with the bull trend, you should be expecting to see Apple trending higher. The financial sector is looking very bullish, going up 0.3% today and very close to regaining the full bull trend. And we still do have that gap to fill at $41 above. The industrial sector is still looking weak with price action below all the moving averages, and we still have the bear trend, and we're still below our support trend line. The healthcare sector was down 0.17% today and closing back above 3 of our 4 moving averages, but we won't see the bullish breakout until we get back over the 50 EMA, and then we could run up there to go fill that gap right around 141. The energy sector continues to look very strong, going up 1.28% today and closing back above our previous all-time high for the second day in a row. So we could see energy continue to trend higher because we still have bullish price action and a very strong bull trend. So jumping back over the S&P 500, this is definitely going to be an important crossroads in the market, and we're about to see a big breakout in either direction. Watch the critical levels and don't get bear trapped. Wait for the confirmation of the breakdown below support. And the same thing goes if you're getting bullish. Don't get bull trapped because we still haven't seen the confirmation of the bullish breakout and we still are in a downtrend. So use great risk management and trade accordingly, and this is still going to be a very whipsawing and very tricky market with bull traps and bear traps alike, so make sure you know what you're doing and what your critical levels are. Also, don't forget that I do have Bank Trade Alerts, which is an algorithm-driven trade alert service that sends all of your buy and sell alerts directly via email and text message and only trades the ETF TQQQ. With all of this market volatility, now is the best time to be a bank member, so if you're looking for more information or how to subscribe, you can find out all of the details by clicking on the link in the description below. I also have the Stocks Channel Discord where I'm doing intraday updates and analysis and bringing new trade ideas to you weekly. If you're interested in joining the Stocks Channel Trading Discord community, you can find out how to join the Discord server by clicking on the link below. So thanks for watching, everybody. I hope you're crushing this market, and as always, I will see you in the next episode.